FX Morning Mayhem podcast is an essential listen for currency traders. Each episode covers a curated watch list of key currency pairs alongside insightful market observations. It highlights crucial daily news events that could influence the market, ensuring traders are well informed. Additionally, the podcast offers valuable trading strategy tips, catering to both new and experienced traders in the Forex market. This podcast is for educational purposes only. None of this info should be construed as investment advice. To see the trades called out live for free on our Slack channel, click the link in the description or scan the QR code to join the trade faction. If you find this podcast valuable, please follow and share with a friend. And now, on with the show.
All right, let's start with the charts. You have Euro Canadian dollar here, and it is still in an uptrend. It's still in a long wave phase, so we would be looking for long opportunities, but we're very overextended. The amplitude is above 90. Not going to waste our time here for now. We've got the pound Canadian dollar. This thing is hyperextended. Trends to the upside, long wave phase. Nothing, definitely nothing to do here until this thing comes back to earth. New Zealand US dollar also far overextended in the opposite direction. Trends down, short wave phase. Interesting here, what I've been doing here is as these things drop down, I'm scalping a little bit. Yesterday, I scalped about 20 points on each one of these, and I've gotten back in again short and hoping to do a little bit of that today. These are counter trend trades, boys and girls. Watch your powder so you don't fry yourself, because this thing is in the opposite direction. It's trending up in a long wave phase, and I'm shorting it. So I'm doing the opposite of what all the signals are telling me to do because I'm just crazy. US dollar, Canadian dollar, super strong uptrend, long wave phase, but we are way overextended here. Amplitude is at 130. And then last but not least, USD Chief, same thing here, same strategy. I scalped about 20 yesterday. I'm trying to see if I can scalp some more today. I have my profit target set for about 21 pips. Let's see what happens. Now, interestingly enough, we were trying to figure out what caused the big pop yesterday. There was a half point unexpected interest rate decrease in Switzerland.
But they're second pairs.
You're right. It does not make sense. The Chief's on the back end of this pair, so it should have went down.
Like I said, I have no idea what is going on. I
Well,
figured they were dropping a quarter
right.
because at the time I was even on my Singapore dollar chief.
Okay.
And I'm like, that was my concern yesterday. I'm like, am I freaking out here? Because good news on chief should have been a short.
This just goes back to my
Don't trade the news.
don't trade the news, but I just think the direction of the reaction to news is unpredictable. Does that make sense?
Mm-hmm.
You know, it's going to react. And sometimes you try to use logic, like we were just discussing. It's the back end of the pair, so it should go down, not up.
Mm-hmm.
You can't do that. I've been burned by that so many times. That's why a lot of times early on when I was training people, I would just tell them not be in the market when the news is going to happen and wait until afterwards and then choose trade based on the reaction to the news. I used to follow this one guy. I think I told you this story. And what he used to do is he would not be in a trade. Let's say the price is right here, right?
Mm-hmm.
He would put a sell order at the 200 period moving average and a buy order at the 200 period moving average, and it would either pop up here and he'd get short and make a bunch of money real fast, or it would snap down here and then snap back up and he'd make a bunch of money. That worked sometimes and sometimes it didn't work, but that way he had his hedged both directions.
Yeah.
So, market insight today. Let's talk about houses. You just bought another
Okay.
house just recently, right?
Yeah, we
There on
up
the
north
list.
we did. And my kid bought a townhouse too.
Oh, really? Oh, so
Mhm.
you're big time in the
I am.
aware of the housing market. May I be nosy and ask what kind of interest rates are out there these days? Horrible. Okay.
Yeah.
So
We're still in the sevens.
okay, that's consistent with this report that I was reading. It's saying that the affordability crisis for homes is still going to be a problem in 2025. They're saying rates are holding low to mid sixes.
The last time I looked was a couple months ago.
At that price, it is keeping existing home sales 24% below what they were through 2015 and 19 on average. The average interest rate of a 30-year fixed mortgage is 6.3%. My son just bought a house,
Yeah.
and I think he told me he paid 6.5%.
And that's
So
for a 30 fixed?
yeah, for a 30 fixed.
Wow. They go up to 30 now? Used to
What?
be at 20.
Have always been 30 years for the most part, haven't they? At least that's all I remember. I bought this at the beginning of COVID.
No, I thought it was always, yeah, maybe.
I got this one at 2.75.
Ours was ridiculous. I
Oh, it
just,
seems like
everybody's like, oh, you get a free refi. Go for the free refi. I'm looking at this, I'm going, I'm not gaining any benefit here.
you know who Grant Cardone is?
No.
He's a big real estate guy. My wife's always like, when we leave, we should sell the house. I said, we ain't selling this house. I said, we're going to do what Grant Cardone says, and that's we're going to rent this house if we leave. This thing is going to be a revenue generator. There's no way I'm ever going to get another 2% mortgage in my lifetime. And because we can easily get more for a rental payment than we're paying for our mortgage for this house.
Yeah, that's part of that housing crisis right there, too.
It's interesting here. They came up with a chart of affordability index, right?
Mhm.
So what that means is the threshold for people used to be 30% of your income should go towards your housing, right?
Mhm.
A year ago, that was actually at 39%. I was just curious which states were the worst. What would you guess have the worst affordability index numbers?
New York.
New York is at 60% of your income.
Yeah. California is horrible, too.
The one that surprised me, Tennessee at 46%.
Really?
Yeah, that one I didn't expect to see on the list. Wisconsin's up there at 38%. Actually, Illinois is only 31. That kind of surprises me. There's two of the most affordable. Which ones do you think those are?
Arkansas and Mississippi? Or
No,
are we talking the mountains?
no, the mountains are high.
Really?
Colorado's 46%.
Okay.
Utah
Colorado's not.
49%. Yeah.
What, Montana and stuff like that? The
Nope.
Dakotas?
Nope. Nevada is 45%. New Mexico's 46%. Arizona's
All right,
45%.
Nevada, that one, because Las Vegas is there, that should be
Montana's 68%.
68%.
Yeah, how
Wow.
about
Okay,
that?
that is just,
That's all the movie stars buying ranches.
oh man.
Wyoming's 46%. So the answer to the question is the two most affordable states, Iowa at 29 and Ohio at 28.
Really? Okay, Ohio is really the surprising one.
Yep. That's where Dave Chappelle lives.
Yeah.
He says, I
Yeah.
live among the whites.
Yeah.
He's hilarious, that guy.
I know.
Louisiana and Texas are pretty affordable at 34%. Florida's up there, 42.
It's just the,
Everybody went to Florida. That's what happened there.
and then
Cheap.
everybody started moving out because there's no space left in the housing prices went
Exactly.
through the flipping roof.
We have friends that just moved there a year ago and they were just freaking out how expensive everything was. So
That is definitely one of those things.
they're settled in now and they're happy.
I'll tell you, man, it's hitting everywhere because my drinks went up to $5 a well drink
There
up in Wisconsin. So
you go. All right. That's
All right.
all I got for today.